Have you seen the latest numbers coming out of Japan's real estate market? Because they are confusing. The data is sending some seriously mixed signals, where it looks like the market is both strong and weak at the exact same time. So let's dive in and try to solve this puzzle. Right. This is the central mystery we're trying to figure out. How is it possible for a market to be booming in some ways, but also clearly stalling out in others? It's a real economic head-scratcher. To get to the bottom of it, you've got to start with all the good news first. So let's build the case for a booming market. And honestly, if you only looked at a few key indicators, you'd think everything was looking incredibly robust. This part of the story is all about rising prices, tons of construction, and a really vibrant commercial sector. Check out this number, 144.1. That's the latest reading for Japan's residential price index. And yep, it's up again. This tells us that the value of property, especially condos, isn't just staying flat, it's actively going up. You know, on the surface, this is the classic sign of a healthy, growing market. And it's not just homes. Take a look at the commercial side of things. While the overall market saw some steady growth, the office sector just exploded. A 9% jump in a single quarter. I mean, that points to some incredibly strong demand as the economy really gets going. Now, what's really important to understand is that these numbers, the rise in prices, the strong construction, these are what economists call coincident indicators. It's a fancy term, but the analogy is simple. Think of them like a thermometer. They tell you the temperature of the market right now. And based on these readings, things are looking pretty hot. But just as we're starting to feel good about all this, the story takes a pretty sharp turn. Because if you start looking for a few cracks in that strong foundation, well, you start to find them. And this is where the puzzle really gets interesting. Okay, so up until now, we've been looking at those coincident indicators, right? It's kind of like checking the rearview mirror to see where you are. But to figure out where you might be going, you need to look at what are called leading indicators. You have to look at the road ahead. And let me tell you, that view is starting to look a little different. And there it is, negative 2.7%. This is our first major contradiction. While all those prices are going up, the actual number of existing homes being sold dropped, and it dropped significantly in just 1 month. This is a huge deal. It means fewer people are actually buying homes, even as those price tags keep getting higher. So what's causing this drop? It really boils down to two things. First, it seems like prices might just be getting too high. You're seeing what they call buyer reluctance, which is just a way of saying people are getting priced out. And second, there's this growing nervousness about potential interest rate hikes, which could make mortgages a whole lot more expensive down the line. And this brings us right to the heart of it. Japan's real estate market isn't telling one single story anymore. It's telling two totally different stories at the exact same time. The market really does feel like it's standing at a crossroads. You don't have to take my word for it. The government's own analysis sums up this whole paradox perfectly. They said, quote, prices are up, construction is strong, but residential transaction volume is starting to decline. That pretty much confirms this split personality we're seeing. Strength in one corner and clear weakness in the other. You can really see that split clearly here. On one side, you've got commercial real estate and construction, which are all about quality and price, and they're showing strong growth. But then on the other side, you have the residential sector. That's driven by how people feel and how many sales are happening, and that's where the volume is declining. It's like two sides of the same market are heading in totally different directions. Which, of course, leaves us with the one big unanswered question. What gives first? Does the falling number of sales eventually drag prices down in aggression? Or is all that powerful momentum in the commercial and construction sectors enough to pull the whole market higher? That, right there, is the multi-billion-dollar question for Japan's economy.